Oil and gas companies are renewing their commitment, not towards renewable energy, but back towards their legacy business, fossil fuels. Let that sink in for a bit. Companies like Shell and BP have slowed down their plans to shift away from fossil fuels and are intensifying their hunt for new deposits, proving once again that profits trump climate. For more on this, here's a report. Take a look. The renewed interest for oil and gas comes after firms earned record profits from the fossil fuel price surge driven by the Ukraine war. It also is a response to pressure from investors and stakeholders who want to maximize their oil and gas profits rather than invest in lower margin renewable energy businesses. Reports say exploring and tapping into deposits has proved to be a reliable source of profit for energy majors despite the long turnaround time. Offshore exploration takes 5 years to discover and develop. Firms have to wait at least 10 more years before seeing a return on the initial investment. Despite the 15-year factor, offshore oil rigs are experiencing a comeback. The number of offshore drilling vessels used to explore and produce oil and gas recovered to pre-pandemic levels in May. They rose by 45% since the October 2020 low. Analysts predict offshore exploration and drilling activity to grow 20% by 2025. The International Energy Agency forecasts a rise in gas and oil investments by around 11% to $528 billion in 2023, the highest since 2015. Analysts predict the number of offshore projects to get approval this year will reach a 10-year high. African nations are in the spotlight when it comes to offshore drilling. As per reports, Namibia has attracted oil and gas companies. This after Shell and Total Energies made discoveries off the coast of the southern African country. Less than a month ago, a Shell official said results from drilling tests were encouraging. As per reports, Shell plans to drill 2 wells by the third quarter of 2023. Shell has also applied for a license to drill 10 more exploration and appraisal wells. Uganda is another country on the same boat as Namibia. Oil drilling in Uganda began in January of 2023. Chinese and French companies are operating oil fields in multiple parts of the nation.
2 projects will produce the crude oil. That's the Kingfisher project and the Tilenga project. So those 2 projects will produce oil, and this produced oil will be commercialized through 2 other projects. The East African Crude Oil Pipeline that will run from here, Hoima, to Tanzania to export crude oil, and then the Uganda refinery project that will be used to process our crude oil into petroleum products for use.
As per officials, Uganda is on track to begin producing oil by 2025. Estimates say Uganda has recoverable oil reserves worth at least 1.4 billion barrels. The plan is to set up a heated oil pipeline to the Tanzanian coast, which will stretch for over 1,400 kilometers. Bureau Report, WION World is One. All right, for more on this, we are joined by Ms. Manana Koshua from Georgia. She is the co-founder and chairwoman of Green Alternative. She is also an environmentalist and oil expert. Welcome to the show, ma'am.
Nice to meet you.
Manana, this renewed interest and hunt for oil and gas, how concerning is it?
It's very concerning, especially after the May report from the UN climate change convention panel, when very clearly say that next 5 years, its prognosis that the average temperature of the world will rise at least by 0.5 point Celsius, which is very high, and it means that next 5 years we will start to experience one of the most hottest days in our life.
Manana, the move to go back to the old normal is purely profit-driven. There's no doubt in that. Now, it begs the question, why is renewable energy generation not as profitable as oil and gas? And what does this mean, this move mean for green energy going forward?
First of all, the last year events, the Russia's war in Ukraine really make situation much more complicated, but it does not mean that renewable energy is not profitable. The problem is that the oil and gas is traditionally much more used. So this this is like traditional energy pattern which is still needs to overcome. But in general, since last year, again, when the renewables prices have been somehow stalled, and edged, since there it's again comes down. So if you look to this year projections, it's around 2.8 trillion USD supposed to be invested in energy sector, and 1.7 trillion USD is for the renewable energy. So ratio is now for one USD fossil fuel investments, 1.7 renewable energy investments. And this, if you will look past back, like 5 years ago, it was 1-to-1. So the renewable energy goes, prices go down, and also that we should not forget that there is the renewable energy is not just one direction. It's not only solar and wind, which is expanding really dramatically, prices go down, but it's also some innovative technologies like heat pumps. And for the last 2 years in Europe, this substitution of the boilers, fossil fuel boilers, with the heat pumps really creates the deficit of itself, the heat pumps, So here we can see that there is much more demand for renewable energy in the market than devices than the market can supply. So, but I think that soon we will overcome this direction, even with the China, who is doing lots of the things to support the coal and the oil.
Thank you for all those insights, Manana. That was Ms. Manana Koshua joining us from Georgia.
Thank you.